back again with another video. Yes, and yeah, I just finished reading chapter 1 of this 15 invaluable laws of growth, and yes, like the book suggests, you should tackle the chapter 1 of the book every time you finish reading it, because the only way to actually change and grow is for you to change the thing you've been doing every time that is giving you the same results that you don't like. Okay, and if you are able to keep on learning and growing over the course of many years, you'll be astounded by how far it will take you. Okay, and today's video I just decided to jump into the chart to show you guys some trades, some winners, some losers. October was weird, November was still on it, and yes, so to show you guys some of the thoughts behind the trades and how I was able to navigate and how I'm able to trade as well. And I bet you guys are going to really love this video, because should I say, the only way for you to learn is for you to welcome your mistakes and understand that your mistake is another way of doing something, and that whenever you're making a mistake, it shows that you're moving towards something. Okay, and yes, this video I'm going to be doing a trade breakdown, both the winners, the losses, and yeah, you guys are really going to enjoy it if you're really going to pay attention and go with the flow. And yes, I also wanted to thank you guys so much for the amazing 6,000 subscribers. You guys are really amazing, and thanks for the kind words and the support. So without further ado, just jump into chat. And over the loss I took on Friday the previous week, after watching through your market maker series, I found out where my mistake is. And you guys know my trading setup is always external range liquidity, which is the market structure as one of the most important thing I look out for. Where is price and where is price likely to go to. So price is an external range and price should go for internal range to go up. And as you know, in market maker buy model and market maker series, you say market price and you're anticipating price to go to a key level before it rallies up. So as you can see here, we have an order block here, which is a key level. And what makes this a key level? A key level is either found in the daily, weekly, monthly, or 4 hour. So now this is a daily key level. We swept this low, we expanded up, took out this high break of structure to continue to a continuation trade. So now that we are looking at external range liquidity to internal range liquidity, and we have this key level correlating it with USD CHF. This is the key level right here. This is external range liquidity right here. So you guys know, from after taking out a swing high, price retraces back using the high as a support to continue up if it's a continuation trade. So now we're anticipating internal range to external range. Transpose this in a lower time frame to get a feed on what price is really doing. So since we know that this is our external range liquidity that we're going to be targeting next, this relative equal highs right here, also in the DXY. So now in the lower time frame, this is where the key level is. As you can see, that's where price came to react from. So at this point, what you are looking at is price is here and anticipating price to go here before it goes here. So I think it's something we still need to transpose in the lower time frame to get the market maker sell model. But for now, let's just off this. Okay, we know we're anticipating this our external range liquidity to be taken out here. Looking at the daily, knowing that we're still bullish in bias. This is the original consolidation right here. So first of all, is how many candles makes up a consolidation? That's what we don't actually know. So like ICT will always teach, you say after price breaks out from the consolidation right here, this one now, as the consolidation price breaks out, this is a new low. This is the market structure I'm looking at, a new low. But you can see after this low was formed, price retraced back, took out this swing high. That's XBR. That's SBR means sweep break retracement. This SBR, that's sweep of liquidity before going down, which is likely also an OTE, whereby you see we have this tiny swing high right here. If we use our swing high from this high to this low that was formed, we see we have what optimal trade entry to break down. But right here we got a sweep, and like I said, sometimes if you enter at this first high and then later on this high takes you out, then you set your sell limits here for price to tag you along when it's going down. And eventually we got to the place where price said, okay, this is the another high, a low, we got optimal trade entry, a high and a low, we got optimal trade entry, but price was not able to take out this low, which now gave us what? A high, a low. Price still went up again, took out this high, came down, price still failed to take out this low, price consolidated here more. So now we have another consolidation. So using the power of sweep, price sweeps this low, and you see that we still have this low yet to be taken out. Okay, right now what we are anticipating market structure for price to continue lower, to be taking lows, but price has failed to take out this low and now it's targeting highs, and here price consolidated. So right here, when we saw price consolidating at a key level, that's when we will now do what we correlate it the other pair, which is USD CHF. So at this point now, we're not looking for what the setup. Okay, at this point you're not looking for what the setup of the trade. So once we got this sweep, price expanded up with immediate effects away from the consolidation and splitting retracement back into the retracement or the breaker, which is this is what we're expecting at this level. We're expecting the breaker, that's the first break pattern or the failure swing pattern. So this is the failure swing pattern right here. Yeah, then this is the first break pattern where price goes lower, go high, lower, low, takes out this high, then comes back to the breaker block and then expands to the upside. Then looking at this, that's what we got in should I say in USD share. You can see this low was taken out, but this low failed to be taken out. Okay, so this is the high, this is the high. Price came down, price didn't come down. So this is showing relative strength in the dollar, that price is pulling up, which is prior to the election as well. So as you can see, as soon as price went up, next thing we're looking forward to a breaker. So if we go to our 1 hour here, our 1 hour, you see the setup right there. So in 1 hour, you can see we're anticipating we got a high taken out and price went up and came down. As you can see onto the setup, and then price expanded up, and the next thing targeted is what the relative equal highs, which is also the external range liquidity in the daily time frame. So should I say 1 or 2 candles in the higher time frame can be a consolidation in the lower time frame. So from internal range to external range liquidity. So if you're expecting price to go higher, but you're saying that price might go to this key level before it goes up, then you transpose it to the lower time frame and see what price is doing there. And once price gets to the lower time frame, what you're looking forward to is more confirmation to see if price is going to give you the setup at that key level. So that key level now, you're anticipating a failure swing or a false break pattern. So I think that going over this and learning, because there's some things I got out of this, just like how to actually manage trade, which is when price is coming down here, you can add more here. When price goes down again, you add more here, and finally offload all here. Or when price is coming down, you remove some here. When price comes down again, retraces, you remove some here, and finally remove everything from here. So it's just something that made so much sense to me. Vice versa again when you're looking for a buy. I think I really love this episode of ICT 3. I think that's one thing I love about knowing that ICT is free, but I can always reach out to it and yeah, capitalize on it. I'm so grateful for that. Actually, doing here is, I know we're in a general bearish trend, okay, and now we just created an external range liquidity, and we are actually reacting all after inside the internal range liquidity. So now we swapped Asian range high. So if we're still going to be continuing down, which is this consolidation, price did the lower time frame market maker buy model. So I want to see if this is a continuation of the buy model too eventually, because in the daily we'll have some previous which I will be looking forward for price to mitigate, which is this fair value gap, or even up to this extent. But I don't know how much price is going to go into the internal range liquidity. So but today is Friday and I want to see how Friday we trade. So looking at 4 hour here, we got this mitigation block here, we have this fair value gap. You can see how the body here respected, but yet price did not take out this external range liquidity. So in 1 hour, in 1 hour, you can see we have the sweep, have the displacements taking out this low, also have this consolidation back into this place. I would have just entered from here to sell down to this place, but I want to see if this, which of the should I say, which of the PD array price is going to react from. Looking at the 4 hour, which of the POI, that's points of interest, which price, we'll have this other block here, we'll have this fair value gap, and we'll also have this mitigation block, which price is constantly right on. So you're just looking at which of the POI price is going to react from. As you can see, price is still in that 1 hour on, so I'm not taking that as a proper key level yet, because should I say overlaying it with DXY, I'm waiting for an SMT in that key level. If DXY, turn this into candles, as you can see right here, this is the low. We got a low here, a lower low, but we got what, see here, high. We didn't get a higher high, so like that's why I'm still skeptical. Maybe this is a market maker buy model to go up more for a later sell model, or this range will be what we hold price. So we just want to stay down and make sure we don't get caught in the wrong place. So opening price goes below opening price. So I'm waiting to see if we'll get the setup to go higher, that's in the dollar, and then looking for the setup to know if we'll go lower in AUD USD, that's Aussie. Our came here, came down. So I'm looking for lower time frame breaking market structure to capitalize on the trade. Like I was saying right here, I was telling you guys that since we're in a bearish trend, that I was looking for this low to come be taken out, for this low to be taken out, which is an external range liquidity, and go transposing this consolidation into consolidation here. Okay, let's just look at the 4 hour first. We know that, okay, which POI is price going to react from. I marked out this first POI, I marked out this second POI, and I marked out this third POI in the 4 hour, which is the fair value gap. So I was like, you know, in a bearish trend, we're having high, lower low, high, lower low, high, lower low, another high, then we're expecting another lower low. So right now, if price should take out this swing high, that will be an invalidation that price is probably reversing to the upside. That's if price should close above it with body, to be sure that it's not a grab of liquidity, that it's a break of market structure. So looking at this now, I was expecting to continue the sell down. So going down to the 1 hour, I was looking forward to, okay, I saw this little candle 1 2 3 4 5. I saw like, okay, this is more like a consolidation in the 1 hour. What will it look like in a lower time frame? I transposed it to 15 minutes, and I saw that, okay, this is more like the market maker buy model to go to a key level for a later what sell model. So while I transposed this, I was like, okay, this is the consolidation, and now this original consolidation will be our next target. But we want to see the POI at which price is going to react from. Okay, so as you can see, the first market maker buy model, we got the consolidation, price expanded away from the consolidation, we retraced back into this other block, price went back, consolidated again, smashed down back, and took out this swing low right here and hit this high probability order block. This is a high probability order block in this consolidation. Why is it a high probability order block? High probability order block is when you have an order block and you have an expansion, you have a swing low and a fair value gap below it. If price should come back to it, just know that price will buy back. So once we got the sweep of this low, we expanded up again, and in the second reaccumulation, ICT will always teach you is either you get, and how I do it is either you get OTE plus an order block setup, that's for a continuation, or you get the SBR, that's sweep break retracement, then you enter the trade. So right here, this is the two things you can get in this level, and price retrace back up. OTE, if you go down to the 5 minutes, this is where you see this trade. So you see that what we got here is more like an OTE from this low to this high. You got OTE, but if you look at it again, we got a sweep break retracement setup as well. That's two setup at a go. That's what we got in this side. So now this is where we got OTE, which is from this low to this high. We got OTE, although price went a little bit down, but price did expanded up for the external range liquidity. So right now, since we are still bearish in buy, what we'll be looking forward to is if price should close below any low, we are looking to do what? To look for a retracement to sell this lows. As you guys saw in the other forecast I did, that's what I was looking forward to. So this lows. So eventually, as price is taking out highs, creating lows, taking out highs, creating lows. If price is still bullish, it should be respecting the high lows and creating more highs. But right here, as you can see, after this expansion of taking out this sweep, price did what? Surge down, swept this low, and then a retracement back into this low is where I was supposed to buy, or where I was supposed to sell, but I wasn't present in the chart. I was still at work. I worked afternoon duty, and this would have been the trade. And something else I've learned about a trade idea in aiming for the original consolidation is not to get too fancy to aim for this external range liquidity low, because most times in the other pair, price might take out this external range liquidity low, and in another pair, price might fail and just take the bulk of what the consolidation, and then that might be an SMC. So anytime you're trying to trade this kind of external range liquidity, try to aim for the bulk, because if you guys know the trade that reversed back on me on Euro USD, you guys will know that it was same thing that happened to me that period. So now if I had been able to take this trade now, I would have been targeting this, where I would have entered after this close here, this candle, this up candle is where I would have entered this trade. This up candle is where I would have entered, because I would have used this high to this low right here, because what price closed with what, with body below this candle. That's change the state of delivery. Then if you go to the lower time frame, you must see the fair value gap. Then you can see how price tapped into the what, the OTE, and price smashed down. And do you see how price came for the original consolidation? And that was the trade I would have taken. And if you now look at DXY, you see that DXY took out the original what they call it, the high as well here, but you didn't take it properly. And why I say that is, if you guys can look at GBP USD again, you can see that GBP USD did what, smash the external range liquidity low, but what AUDUSD failed to do that, which might also be a way of an SMT. So that's why I think you should look more into taking the bulk of the trade rather than focusing on the swing low more often. Because in the 5 minutes here, I just finished, should I say, breaking it down. So this is the original consolidation, the expansion. So you would have entered here, well, if you had entered from this low to this high, it was not OTE. Look at, you see, it didn't give you OTE, it didn't come down to the discount, so it's more better off than here. You can see this is where price retraces back down, so to this level. See OTE on the dot, price expanded. This would have been your first trade, but I don't like, with experience, that's experience that will guide you. So it's constantly when you keep on feeding yourself of this real time, studying it, that's when you can be able to trade this one, trade this buy, and eventually being able to take the sell as well. Okay, but for now, as a beginner, I think you should be focusing on understanding it, and with experience you can, should I say, key into it more often on how it works. Okay, so right now, as you can see, this was the first trade, this is the second trade, this is the third opportunity, and then this is the final opportunity. Targeting the what, the original consolidation. And isn't this just so beautiful? Like, isn't this just beautiful? Like, most times you just look at ICT stuff and you'll be so amazed how everything it teaches just happens. Like original consolidation, the first reaccumulation, second reaccumulation, third reaccumulation, and finally this is where everything got distributed and dumped here. So like he explained, you can be a buyer here, all right? Once price takes out this high, you offload some here, enter some again, offload some here, enter some again, offload some here, enter some again, offload some here. Like, this is literally an ATM set, like ATM machine. But I just think it's with should I say, time and experience. That's when you can, should I say, be able to take this kind of trades and not be scared. Because I'm not gonna lie, as a beginner myself, I'm not putting any limiting belief on myself because I know I can do it. But I think it's with time and with the proper capital and the proper mindset towards trading, that's when you can be able to take these kinds of trades. And I hope this video was insightful and you got a lot out of it. And yeah, hopefully we look forward to eventually capitalizing on this trade, having full focus, having full time to, should I say, be on the charts when the charts needs us, and be able to capitalize on this trade rather than missing our forecast. Because it can be annoying, but one thing I know is that my time is going to come when I'm going to be like working a job is not going to be the reason I'm going to be missing every trade I forecast. Okay, all right.